Welcome to Hot Topics on the Edge of Show. I'm Richard Carthon. I'm here with my co-host Josh Kriger. Today we have a very special guest joining us from RELM, Christian Davies. How you doing today?
I'm awesome. Thank you very much, sir. Very well indeed. Hope you're all well as well.
Great to hear. So, coming up today, we will focus on Bitcoin mining. Can it be gamified? What's a smart play with infrastructure and power, and how does minimizing risk come into play for miners and companies?
This episode is brought to you by RELM. RELM crafts insurance solutions that gives businesses and dynamic industries like Web3, AI, alternative medicine, biotech, and the space economy the protection to innovate and thrive. Where emerging industries have previously battled uncertainty, RELM is making innovation resilient. The views expressed by Edge of Company do not necessarily reflect those of RELM.
This is another production of the Edge of Company, a rapidly growing media ecosystem empowering the pioneers of Web3 technology, culture, and innovation. Let's get started. To kick off with something that blends GameFi and mining in a way we quite haven't seen before. All right, let's kick off with something that blends GameFi and mining in a way that we haven't quite seen before. GoMining Miners Wars. The platform has 165,000 plus users playing a mobile game tied directly to real Bitcoin mining infrastructure. Players use NFTs with hash rate attached, competing in mining clans, and actually receive real Bitcoin rewards based on performance. So it's sort of like Web3 version of Clash of Clans, but with Bitcoin. Richard, we've talked a lot about Bitcoin, we've talked about mining, we've talked about games on the show. We've never seen them all blended together like this. What stands out for you here?
Yeah, it's pretty interesting. So I went and looked at the game itself, and obviously it's a mobile game, but you also have the ability to play it on desktop. And when you first get in there, they give you the opportunity to play for free, and then once you get like after the trial, you can then pick one of their NFTs, which essentially is a miner. And so as you're playing the game, you can increase like hash rate and earn more rewards and earn more Bitcoin essentially. And so I was looking through their X feed, and they're very active. They still are growing. They still have a lot of people coming into the space. But it was really cool to see like the intersection of gamifying Bitcoin mining, but then also giving people another way to have access to hash rate. So I thought it was a really cool blend of mixing these three together. But curious, Christian, when you're looking at something like this, and we see more of these hybrid platforms mixing real world incentives with gamified user experience from a risk and operational resilience angle, what kind of frameworks do you think need to exist on platforms like Go Mining to scale responsibly?
You know, I think there is a limit as to what you can potentially gamify in life. It's an incredible kind of theory, gamification. Um, when I saw about Go Mining's Miner Wars, I was scratching my head, right? But then when you look at 165,000 players, maybe I shouldn't have been scratching my head. Um, I guess we just have to really look to see what the longevity is, right? It's how do you keep people interested. You remember when Axie Infinity first came out, that was global, and there was millions and millions of players, and we know how that's kind of slowly fizzled out. There's still huge rewards to be made on that, but when you're looking at the resilience of some of these companies, look, let's do a virtual underwriting session on this on Go Mining's Miner Wars, right? What is the infrastructure? Is it their own bare metal infrastructure that they have set up, that they then have built a gamification tech stack on top of? Is it another third party's infrastructure that might be running underneath that, and they're gamifying third parties' infrastructure? Is it already existing mining pools on some of the very large some of the very large mining pool creators out there that then they're putting that gamification level on top of that? It's like, how far away are you actually getting from the underlying mining itself? So, a little bit of an insight there as to the process that we would be going through. And when you're looking at the operational resilience, is like, it's all well and good having 165,000, but you've got to keep those people there. if anything goes wrong because you don't have control of the underlying infrastructure or the underlying process or the underlying technology, then you very quickly see that 165,000 people very quickly move to something else that's, you know, a little bit more fun, a little bit more interesting. And yes, it's mining. Yes, it's a new way of earning revenue. Yes, it's fun. But if it doesn't continue to be fun, then where's the revenue going to come from? And
Yeah,
that's the big thing.
a lot of interesting points you bring up, Christian, and you know, I think this is the type of closer examination that we often sort of overlook in our industry when it comes to investment of time and resources. I mean, this is something even the folks playing the game should be thinking about, because what if they do get really into this, but it doesn't have the scalability and staying power that would make it a worthwhile use of their time? I mean, at this point, for some people, gaming is just, you know, a leisure hobby. For others, it's a livelihood, and these are the types of things that matter in terms of something like this. Hopefully these guys have thought about some of these things, and if they haven't figured it all out, they're working on it. I think the interoperability component they've added, with the ability to sort of go cross network, is really creative. You know, they wanted to tap into Solana's liquidity as well, and we know that's really interesting to folks. So yeah, this will be an interesting one to watch and see what happens next with these guys. But that's interesting discussion, guys. So topic 2, what AI can learn from Bitcoin mining, and this is actually based on Kevin O'Leary's Power Play. So we talked about mining and gaming. Now let's talk about the intersection of mining, AI, and global competitiveness. Shark Tank investor Kevin O'Leary just made some headlines saying the US is learning from Bitcoin miners in the global AI arms race. And the big lesson: power infrastructure is everything. Miners have been locating operations near cheap and abundant energy for as long as I can remember. And now AI data centers are following suit, especially as global electricity demands from AI and crypto could double by 2030, according to the IEA. So I guess, Richard, are we watching the blueprint of Bitcoin mining become the new playbook for AI infrastructure? And if so, what does this mean for how we define innovation hubs moving forward?
Yeah, I think we are. You know, one of the innovative things that a lot of Bitcoin miners have had to do for years is figure out how to get off-grid energy. Um, Whether that's been through like natural gas flaring, renewables, even looking at like nuclear partnerships. There's been a lot of strategy that's gone into Bitcoin mining, and even figuring out how to make it renewable by using excess heat from things to power that back into the grid. So states like Texas, North Dakota are starting to look like digital infrastructure gold mines, not just for crypto, but AI as well. So one of the challenges that AI has right now for maximizing the amount of output that it has to increase the amount of people using it is power. And of course, with everything also becoming a little bit more moving towards like our infrastructure having more electronic vehicles like Teslas and a bunch of other vehicles that are more going for EV, even though, yes, you're not putting gas in those tanks, you still have to use different upstream vehicles to power that from the grid. So it's still taking a good amount of energy. So as Bitcoin miners have been strategically, creatively coming up with a ton of solutions, they've made a playbook for AI people to do the same. The challenge, though, is that there's not a whole lot of new places to go and explore and find these places for energy, which is why for a lot of people who are becoming energy companies, they have a really big opportunity in front of them. So, Christian, for you, as someone that's focused on emerging infrastructure risk, how do you view the convergence of AI data centers and Bitcoin mining? And how do you think that power-based risk modeling is going to evolve this hybrid future?
Well, for starters, I'm glad you said Kevin O'Leary and not Jim Cramer, because if you said Jim Cramer, this nothing, we wouldn't be talking about it, because it would probably just go to zero if he said it was great. But you know, looking, let's just talk about the insurance industry to begin with, right? it was very, very difficult for crypto miners to get insurance because everyone was like, oh, ESG nightmare. Absolutely. Can't touch it, can't touch it. Yet AI's come and no one's paying any attention to the ESG side. Bitcoin miners had to work incredibly hard to find as many different renewable resources as possible to kind of get rid of this ESG stigma that they had. Not to mention, Bitcoin mining didn't have a huge amount of government support or investment or state support, federal support, global support. Yet AI infrastructure, the British government, the US government, every other government seems to be YOLOing millions and billions into, AI infrastructure and AI data centers. So when you look at the risks we associate with it, and one of the cool things that we did at RELM is we built the first ever Bitcoin denominated business interruption insurance product for Bitcoin miners, because what's the point in paying out a Bitcoin miner in USD when all of the profit they make is in BTC? You get that massive kind of FX arbitrage problem. And what they need to do is they also need to stop putting themselves all in exactly the same places. So Richard, you and Josh, you mentioned, like Texas, North Dakota, and Alberta. I don't know what this obsession is with putting themselves in hurricane areas and flood areas and earthquake areas, etc. Because, and they're all relatively close to each other. You get the same, the age-old problem that everyone has had in the property market with hurricane season. If you look at California now, just from an insurance perspective, it's close to impossible to get property insurance in California because of the wildfires. And they're going to need to spread this infrastructure across multiple different jurisdictions, across multiple different states, because of the operational risks you're going to have with natural disaster. So that's something that we obviously look at. We're able to build these custom products, like I mentioned, on the BI, the Bitcoin denominated business interruption. And they are enormous overlapping categories. We see a lot of Bitcoin miners now transitioning to AI miners because of a lot of the grants associated with it. But people forget Bitcoin uptime is like 80%, right? Maybe even 70%, and they're still making money. As soon as you're outsourcing any of your power and infrastructure to AI, if you're looking at generative AI, that's like 99.9999% uptime that is required. So when we talk about operational risk on that, we're starting to look at SLAs with third parties. It was great whilst you were just kind of mining and printing your own money from a Bitcoin perspective, because you could go on, you could go off, the grid could turn off because of power savings, because of the solar flares or something else that might be going on in the state at the time, or everyone's got their central heating turned on because they've got this weird freeze going on in the middle of Texas. And now you can't do that with AI because you're beholden to all of your third-party service providers you're providing this AI compute power to, and those uptime SLAs are ruthless.
That's really, it's an interesting point you bring up there. And I read another article that talked about the risk of building AI infrastructure in the Middle East with the sort of, vulnerability of drone attacks, right? So I think we've got these natural considerations. We've got this, global security considerations. You can sort of, quickly do a miscalculation if you put all your energy to the lowest cost mining infrastructure and location, and you don't think about these other possibilities. So really interesting point. And again, I think this is this kind of goes maybe to Kevin O'Leary's point, that thinking about the most broad strategic criteria for Bitcoin mining in AI infrastructure is quite similar if you do it right.
Yeah, absolutely. I do totally agree. It's very, the Bitcoin roadmap or blueprint was very much kind of like the baby step for AI. And what we also need to make sure is not every Bitcoin miner gets brought into this, wide-eyed kind of, let's go to AI, because then Bitcoin infrastructure is going to start to suffer.
Well, Yeah, we recently had a interview with CleanSpark, and they're sort of all in on Bitcoin mining, as everyone else is sort of looking at other things. They're committed to mining in the U.S. and 100% Bitcoin mining. So I thought that was interesting. So sometimes if everyone goes right, it might make sense to go left.
100%. Yeah, totally agree with that. The miners are also looking to us for some of these kind of more nuanced products as well. So, like guaranteeing of hash rate as an insurance product. Um, eh, that I mentioned for a third time, that BTCBI, it was like, they came to us, the market won't cover business interruption for Bitcoin miners. So, that happened. The hash rate perspective, obviously, it makes investors a lot happier if we can guarantee hash rate, or the luck aspect of Bitcoin mining. So working our way through that to see if that is a viable insurance product at the moment, which is also quite fun and unique.
Definitely. And I want to continue on that block because the final topic of today is shining a light on Realm. So you've been pioneering insurance solutions for industries. We've been talking about this entire episode, from Web3 startups to Bitcoin miners to AI-linked infrastructure. The reality is traditional insurance often doesn't work with crypto. Policies weren't built for protocol staking, DAOs, dynamic mining environments, and even looking into what's happening in AI. And that's where Realm steps in. So instead of us trying to explain it, we got you, Christian, to kind of walk us through a little bit of this. So how is Realm helping Web3 operators and miners manage risk? And what's your approach? And how is it different from legacy insurers who are still trying to figure out how to put these square pegs into round holes?
Um, let me just talk about our history very briefly, right? We're 6 years old, and that doesn't sound very long for an insurance company. But when you look at the industries that we've been insuring crypto for 6 years. As we know, crypto is a bit like dog years. That technically means we've been doing it for about 70 years right now. But we've seen in excess of 12,000 companies in over 38 different jurisdictions. So, and we've been insuring Web3 companies for 6 years across all different lines. It's not a case of, oh, well, we only do this part of crypto or only do this part of crypto. No, we cover the whole of the Web3 gamut. Layer ones, layer twos, DeFi, mining operations, mining rigs, all the full ecosystem and everything that comes with it. The directors and officers of it, the theft of digital assets, the infrastructure, the theft of physical miners, the destruction of mining shipping containers. When we look at what Realm is actually, the industries that Realm is insuring, it's not just AI, it's not just crypto, it's alternative medicines, it's the sharing economy. It's everything that is going to further the world in what we do from either a finance perspective or a mobility perspective. And we, quite frankly, that's our interest, that's our passion, because the traditional insurance market isn't really worried about it. They don't want to learn about this new stuff when they're already very happy making money on the old stuff that they cover. The other problem is insurance has a cyclical nature where you get soft markets and hard markets, right? It's at the difficulty rate for hash rate, and then lots of people pile in and lots of people pile out when they start to get burned. In the 6 years, we've had people come in and then very quickly leave after they thought this is really easy, have not taken into any consideration things like tokenomics, and then got immediately burnt by massive claims that have come in of like shareholder class action lawsuits against them. And now we're getting to a point where we've got more markets coming in, and we've already seen that within 6 months that some of them are immediately getting burnt. We've handled in excess of 300 claims just on the crypto side now, and so we know what works and how it works and when it works on a global basis. So that's kind of like really, it's at Realm's core, right? It's all tailored underwriting. We have a massive jurisdictional awareness. We work very heavily with regulators. Josh, obviously, we met in the Middle East, and we sat down and after conversations with different governments and regulators in Asia, in the Middle East, and how they're applying specific insurance requirements to help bolster their regulatory infrastructure around these emerging risks. And that's what we're there. We're kind of there in lockstep every single step of the way.
So what I think is really interesting about what you shared is, Web3 is to some degree about bending the matrix with new mechanics, new incentive programs, more stakeholders, more flexibility with what you can do to create value in the world. And insurance has historically been a little bit more rigid in terms of the nature of products and services that are crafted for folks to take advantage of. And it's about sort of, choosing, I would say, the products that have the most scalability, where you all have taken a very customized and creative approach similar to the Web3 industry itself. And I'm wondering, how do you do that in an impactful yet cost efficient way? Like, how does that work? Because all these new products and services involve analysis and bring a lot of complexity to the table. So how do you balance all that?
The cool thing about Realm is obviously we've got our global broking network, but our brokers come to us and they ask us like how we can help their client. And we have amazing interactions with our clients that, again, traditionally classical insurance doesn't really get a lot of that because the broker is the one broking the risk to the insurer. So we have these relationships where we will build completely custom bespoke products because the client is like, Realm, here's all of our information. This is what we'd like to do. Let's figure out a way to do it. It could be 1 month, it could be 6 months, it could be a year of a load of information and data sharing. And we then build a completely bespoke product. That actually happened on the BTC product for crypto miners. It happened 3.5 years ago, I think it is now, on the first ever regulated slashing insurance product that we built. Block Damon came to us and we're like, do you think we could insure this? And we're like, let's share some information here and let's figure this out. And we built an insurance product that is slashing insurance that exists today. And, most of the staking as a service companies now purchase that. So that's why, we like to be hands-on. We like the information sharing. And ultimately, it's going to sound really strange, but it's fun. Insurance is not classically a fun thing. And this is really, really, really fun. Like, it's constantly innovative. And, I referenced the 6 years of existence. One of the fascinating things about Realm is the first 2 years of its existence, it was entirely its own balance sheet. Actually, I believe 3 years. It was entirely its own balance sheet. So we really had to stick behind all of our underwriting and our knowledge gathering and our processes and procedures. Now, ultimately, what resulted in our prowess of that was like, we understand what you guys are trying to do. And if we don't, we're here to actually learn from you so we can better support you. So that's the cool thing.
So I love that you talked about fun, and I was waiting for you to say that because it sounds like you guys are having a lot of fun coming up with creative solutions for the Web3 industry. As we look at the edge of innovation, the edge of innovation comes with risk, and that's why we're excited about this partnership with a company that's thinking about the risk side of the equation to keep our industry secure and scalable. So as Web3 matures, risk management can't be an afterthought, and teams like Realm are proving that purpose-built protection isn't just possible, it's essential. So I encourage you to reach out to your local broker and figure out what Realm can do to help you move forward in your edge.
So that's going to wrap today's episode of The Edge of Show. Join the conversation on social and let us know what you think, because the edge of crypto and AI is where the action is, and we're here to keep you informed.
Thanks for joining us as we navigate the latest and greatest in Web3. I'm Josh here with Richard, our guest Christian Davies at RELM. Stay curious, keep pushing boundaries, and don't forget to subscribe so you'll never miss what's next on The Edge of Show.